And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Anytime you're talking about fundamentals in a market and direction, fundamentals take a little bit of time to play out.
We got crude oil today, kind of trading yesterday's value area really nicely, low to high.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good morning and welcome to the Market Forecast. It is Tuesday, August the 24th. I'm John Hoagland. As always, thanks for trusting me with your time. We've got a lot of interesting things going on in the markets this morning. If you're in the markets, hopefully you've got things going your way already. But as always, we're going to be looking for accurate context, good risk management, and exercising good patience. This morning, as far as economic numbers, not too much coming out at 9 o'clock, new home sales. Be a lot of focus on that, is pretty much the only economic number due out this morning. So we will certainly have to keep an eye on that. They're looking for, I think, some pretty good new home sales this trip. So some pretty good expectations on that number. As far as other news, China has finally decided to back off a recent regulator scare. Chinese stocks have had their best day this year because of that. U.S. equity futures set to open higher today on Pfizer's FDA pass, China's big day, and hopes for continued economic recovery here. Dems, however, are having a little bit of trouble passing the spending bills that they've been working on. Spending, I guess, late into the night last night working on it with no results. And crude prices continue higher on the China news, of course, facing a drop of 2.3 million barrels by the API this afternoon, and approximately the same thing is being expected from the EIA tomorrow. So we have some new information coming into crude oil, but crude continuing to push to the upside. As always, make sure you hit that lucky like button, comment, question, share. Feedback and heckling are always welcome. And as usual, make sure you subscribe to our YouTube channel when we do go live. We've got a good coach's playbook for you this week about 11:30, so we'll look forward to seeing you there. And as far as the VIX, the dollar and the 10-year yield, the VIX was up a little bit at 1740 from yesterday's close. Still not a very high number. Dollar index 92.94. The 10-year yield holding pretty much steady at 1.26. As always, got to say good morning to everyone. Joseph, the future scalper, first in the room. You win the prize. Good to see you, Joseph. Ryan, Drew, good morning. Jim, Theo, good morning. Stacking bananas. Always a fun idea, it sounds like. Brian, Kevin Guy, Ed Nelson, good morning. And yes, have a blessed day yourself. Bill, Daniel, George, Laura, Charles, Caesar, Jimmy Decker. Sounds like maybe a relative of somebody we know here, Mr. Jimmy Decker. Sergey, good morning. Vince, Rob, Terrain, Jorg, James, Trading Research, Greg H. Jerry is awake, and hopefully John is too. Providion and Stacking Bananas. Smash the like, folks. There you go. Thank you, Stacking Bananas. We'll stack some likes. Today's Tuesday. Good morning, JB. Good morning for the journey. Hey, Yoro, what's up? Hey, how you doing? Good to see you. All right. As usual, it's Tuesday. Wednesday is group coaching day, 1 o'clock p.m. Central Time after lunch. Group coaching, here is the link to register. We'll look forward to seeing you there. Mr. Jimmy Decker's brother, Fred Decker, is always sending in really good, really challenging and interesting questions. He's got a couple sent in already. There's Fred. I think your brother's here, Fred. He's got a couple of questions already sent in. We're gonna get into them, hopefully with a fine-tooth comb, and get into any questions any of you have. You are able to send me a question prior to the session. My email is on that sign up. Send in any questions you have. I usually will take care of the ones that are emailed in first to give me a little bit of prep time. But as always, anything on the fly, we're gonna address. If I don't know it, I'm not gonna tell you I do. We're gonna learn a lot together. It's one of the things I love about that is I learn probably more from all of you than you learn from me. So, all right, I think we are set to go to the charts. Let me get things set up correctly here, and we will go take a look. Yes, it looks like your brother Jimmy is here. No relations, just a great name. Wow, that's great. Wow, we got a couple of Deckers here. That's great. All right, let's take a look at the charts now. Let's starting with the daily and crude, no particular order. Everybody knows the rules. All right. Here's the daily. Short covering yesterday indicated not only by the shape of the profile, but by the loss in open interest, losing 19,000 in open interest, coming off that low on pretty decent volume. So the volume was pretty good. We losing 19,000. I want to show you the profile here. So whenever we see a market profile or even a volume profile that's holding this P shape, it's indicative of short covering. It's buyers, initiative buyers that are trying not to push price too far higher because, hey, they've got shorts to cover. The thing about shorts is it takes buying power out of the marketplace. It's looking like we've got the opening range at the low of the session here, maybe so far in crude oils. Just taking a look at what we've got. We've opened with a gap. Let's go back now and look at the daily chart. I'm kind of the medium time frame downside structure is still intact. We've got to take out the weekly kickoff high if we're going to change that. I'm expecting a bit of a smaller range today as we await the new data from the API and the EIA. Take a look at the 30-minute chart. Okay, we've got settlement right here, 65.64. Put that on your charts. We are holding some potential overnight longs. Remember, when we take out some of the short covering, we do take some buying power out of the marketplace. So I think there's possibly a higher probability of a gap close today, which we did not close yesterday. Okay, we opened, we took a little bit of a look down below the opening range, and we drove higher for the first hour and a half, and then we just ranged. We just kind of hung here and ranged. So again, we've got some overnight longs. We've got a little bit of a gap here. If it looks like we're going to come down and close the gap, I'll look for opportunities, perhaps down back to settlement and or yesterday's point of control. Not a lot to see here. We've got some visuals to kind of look to the upside for and to the downside, but we also have the gap from yesterday, which is a little bit of perhaps unfinished business down there. It doesn't mean we have to go do it, but if we continue to kind of close this gap, I'll watch for opportunities, perhaps again near point of control from yesterday, settlement from yesterday, somewhere between there and the overnight low. Looks like a pretty decent opportunity. And again, it's all about limiting risk. If we can't find a way to limit risk, I'm going to wait. I'm going to look for an opportunity that tells me, all right, if we get to this level, we take that long or we take that short or whatever it is. But if we get too far beyond this specific level, that's saying that we're probably wrong and we're going to need to get out. So I'm going to be looking for opportunities to limit risk no matter what I do. All right, so take a look at the E-mini S&Ps. All right, so we got another all-time high in the overnight session. Here's this is the daily. Last night, the weekly kickoff high was relatively supportive. We just took it out before the forecast here, basically trading to last week's high, and now we're back above weekly kickoff high. So We're looking at this area here as a supportive level. We had a pretty decent move to the upside. We didn't draw in a whole lot of volume in futures, but the New York Stock Exchange was off by maybe at 1% in volume, which is good. The equity markets don't seem to bring in a lot of volume on the upside. It's on the downside when we see all the big volume come in. We did add 22,000 estimated open interest. So not only was it a short covering rally, we had short covering meet new buying come into this market. Where we are now, we are at all-time highs. We've put in an all-time high in the overnight, and we know that the regular trading hours don't like that. It's usually a pretty good probability that when we put in an overnight high in the overnight, then we take it out in the regular trading hour session. So take a look here at the TPO chart. Another short covering P-shaped profile from yesterday. Short covering would indicate a loss of positions, but we also added 22,000 in open interest on this move to the upside, which says, hey, that's possibly new money, new business coming into this market, which is what we need for continuation above where we currently are. We need new business, new buyers to continue this push to the upside. So this is the 30-minute chart. Settlement is down here at 44.75.50. Put that on your charts. Here's our dip down below weekly kickoff high, back above it, in range, in value, no real overnight inventory with which to speak of. Tells me that, there may be better trade locations as the day goes on. I'm always going to be watching the opening range trade, and if that doesn't provide opportunity, then I'm going to look for, better trade locations again as the day goes on. I mean, we've got value low, we've got point of control from yesterday, which is 44.80, the weekly kickoff level. So these are all kind of important levels and visual levels where traders will start to look for taking opportunities. Again, what we're looking for is acceptance above 44.80. We need new business to come up here, take out the overnight all-time high, and put in a new all-time high in the regular trading hour session. We've been chasing overnight highs all the way up, and it doesn't seem that we're going to be stopping anytime soon. That said, watch what happens. Take a look at the Nasdaq now. Nasdaq is a wily beast. All-time high on weak volume. Doesn't mean that it's not good. Again, the equities don't bring huge upside volume. The volume comes in on the downside. So we added 16,000 in open interest on a same thing. We've got a P-shaped profile. So we were short covering, meeting new longs yesterday. It should be a pretty powerful indication, shouldn't it? But we never know. Here's our new all-time high in the extended trading hour session. The Nasdaq has been presenting as stronger. It's already had a close above weekly kickoff high. So the Nasdaq should be kind of leading, if that's the case, the move to the upside. We're holding maybe some longs, maybe not. I mean, settlement is right here. It's 15,304.50, and it looks like we're almost at risk in the Nasdaq of creating a gap open. If that's the case, and we can't close the gap, it's just a matter of minutes before we take out this overnight high. All right, so if we do manage to open with a gap, can't close the gap really early, the overnight high is the next visual target for us to look for and to take out. So really the kind of question is on the open here, are we going to gap open in the Nasdaq? Are we going to leave that gap unclosed, or are we going to open inside range and value and drive out? What's going to happen? I don't know. But opening in range and value is, probably going to be telling me that maybe a little patience is going to be important today. Of course, I'll be watching the opening range trade. The opening range trade and the Nasdaq and the S&Ps were really good opportunities for us yesterday, as I think as well in the gold. Let's take a look at gold. There's a little something I forgot to talk about yesterday morning, and it was a pretty decent opportunity. We for some reason, my little bear flag here was not on my charts yesterday morning, and I forgot to really mention it. So we did see a breakout above our bull flag, which means continuation to the upside. We've got a weekly kickoff high at 1807, really kind of a range from 1807 to 1809. Volume and open increased on the upside move yesterday, adding 9,000 to the already building open interest we've been watching for a few days here. Volume was a little bit better. We didn't necessarily get a good close, though. We closed at 1806.30, just below that weekly kickoff zone. It looks like we are headed back to the upside, and for more continuation today, I certainly see that there is some space up here. Our first stop would probably be these swing highs up here that aren't really that strong a high. I mean, coming back to them, looking at them, they're pretty exact, and that's short time frame sellers up there. But I mean, that's a pretty substantial move. We're looking at, 25 plus points of space above. Take a look at the 30-minute chart. So here is our bull flag, yesterday's opening range, which was never penetrated. This morning we opened, we looked below the opening range. That didn't work. We've broken out above the opening range, and we're finding some continuation here. We're seeing what we're looking for here, and that's new business coming in and driving this market higher. Here's the close below that 1807. We're now above the 1809 high from yesterday, which is part of kind of this weekly kickoff range that we're dealing with, and the market is starting to one-time frame higher. So if you're long, this is a potential bigger move to the upside. I'm going to go back to the daily here. My man Vince was just kind of pointing this out this morning. If we were to take a trend line and go off this here and kind of just go across these highs, this is a kind of an important convergence here, right? We've got this trend line against a weekly kickoff level, and it's the day where this is either going to go or not go. We find that when we have kind of a convergence in, kind of a unrelated levels that meet on the day that they meet, some big things can tend to happen. So I'll be keeping a pretty good eye on that gold market this morning. All right, let's take a look into the euro. All right, so downside structure still remains. Volume increases a little bit, but open interest drops. Okay, on guess what? A short covering rally. And when we see the TPO chart, let me see if I can get that up here. So here's yesterday's regular trading hour session. We'd opened with a gap, which we would call that like some invisible excess, and then just kind of the upper part of the P right here. We lost 6,500 in open interest. We got too short in the hole here. This weekly kickoff high is a potential for a change in market state. I think we're probably a little bit closer to last week's high before we're going to see that market state really take place. Downside structure, however, is at risk. The weekly kickoff high is going to be somewhat pivotal today. 30-minute chart. So just to kind of show some of the visuals that have been left behind and where some repair may be needed before a true breakout and continuation above this weekly kickoff high level here at 117.40. We've got a naked point of control that went right through the gap that was left yesterday. We've got another naked point of control down here. So there's some visual targets to the downside. Should traders start to fixate on them, they'll tend to make that happen. But right now it looks like we're kind of one-time framing higher off the weekly kickoff high in regular trading hours, just taking out the overnight high and last week's high right now. We got our hulls, which are kind of telling us that the momentum might be to the upside. We're also seeing a potential divergence in delta. When delta is going lower or more negative on price moving higher, that can be an indication of longer time frame buyers in the marketplace. So, one of the things that we're always looking at is that delta, and if we see that it's opposite direction, that tells us there's something else going on. There's another time frame trader perhaps involved in the marketplace. Nothing is ever for sure, but it's one of the ways that we can recognize them. All right, so to the 10-year, let's start with the daily. 10-year has been pretty mired right around that, what was it, this morning, 1.26%. You can just see it in price. 1, 2, 3, 4, 5, 6, 7 days in balance. We've got an inside extended trading hour day started for us today. We have pretty low volume. Volume seems to just kind of be cutting off here. But however, yesterday we had a pretty good jump in open interest off this weekly kickoff low here. This 53,000 contracts added yesterday. So perhaps we're getting a little bit long in the tooth in this area of balance, using up its ability to facilitate trade, and a change may come. But I've got, last week's high and low as weekly kickoff high and low this week for a reason. We're range bound. We're expecting to be range bound. When we get to the extremes, we fade those extremes. We go with any breakouts that are accepted outside of the balance area. So this is going to be interesting, to say the least. Aren't they always? So here's the 10-year. Last week's low, weekly kickoff low, all the way up here as well. We don't really have any naked points of control. We've been in this area for so long that every point of control has been rechecked, and so we don't have any visuals here. It's just kind of a random short time frame walk here, it seems. I'm kind of back burnering this market, at least for the time being, unless I can see price approaching one of these more important inflection levels. As far as today is concerned, settlement is up here. It's 134.07. And we're basically right in range, right in value. No rush to get involved in too much here. Not much to see. I would just move along for the time being. Regarding the delta, are we looking for divergence? Yes, we are, Malachi. Yes, we are. Because when we have price moving higher, and the more aggressive traders are creating more and more negative delta. In other words, the more aggressive traders are hitting the bids, which would make sense that price would move lower, right? But when there's somebody else involved, maybe there's some ICE orders being placed, or some growler orders, or some longer time frame buyers just placing bids and letting them get hit, placing bids, letting them get hit. Soon as the short time frame won't sell them to them anymore, they'll move them up. Well, if the short time likes selling them down here, they'll like selling them up here too. So they just keep placing those bids and letting the short time frame traders end up way too short by the end of the session. And that's sometimes when we see those late spikes to the upside or the downside, depending on what direction we're talking about. But that's sometimes when we see those late spikes occur at the end of the session, is because There's been a longer time frame buyer present in the market all day long, pushing price higher against the more aggressive market order sellers, the short time frame traders, and they just keep getting shorter and shorter and pressed and pressed and pressed. And at the end of the day, you see the big push to the upside. So, yes, that is exactly what we're looking for as far as Delta is concerned, is divergence. Fred was looking for a short covering crude at the end of last week, as traders were too short all week, took profits. Perhaps short covering on Monday was profit taking. Yes, yeah, we were coming off a low, and I would say that we probably got some. And just thinking about what you're saying here is, I'm always looking for profit taking at the at the end of the week, like on a Friday, and it's funny how sometimes it just doesn't happen. It always seems like sometimes we're a day early with some of the things that we're looking at in these markets. What time frame do you find Delta works best for us day traders? Well, I mean, you can look at it in basically any time frame, because it's not necessarily time frame based. I'm a market profile guy, so I'm a 30-minute guy, 30-minute chart. But it's not really time based. I mean, if you're looking at a 5-minute chart, the delta is going to be the same in the half hour as you're looking at a 30-minute chart. Okay, yeah, my pleasure, Malachi. The delta is, one of the secrets, if you will, of the day trader. A lot of folks don't know about it. They don't recognize it. They don't think it's useful, or whatever it is. And hopefully we all have the things that we find useful and help us find good opportunities. But open interest is one of them that people just don't seem to pay attention to. And there's a lot of times when it doesn't help us. It doesn't do us any good to be paying attention to open interest until it is. There was a situation in crude the beginning of the year. We saw a 10% increase in open interest in crude oil within a $2 range the first part of January into February. We knew when that broke out, that was going to be a big move. There was a lot of energy behind it. There was a lot of planning for it. There was a lot of, just a lot of energy behind it. When you have some pretty big open interest, that's saying something. There's a lot of traders that are able to affect price in that regard. So, all right, we've got about 2 minutes to equity open. Take your breath. Stay humble. Stay grateful. And always be creative. Accept information that may be contrary to what you think. Trade what you see. Get out there and profit today. Trade well. And I'll see you in the pit. And, hey, we'll see you at 11:30 for the Coach's Playbook.